And I thought it was important for us to make this point because there is the risk that some investors may be getting ahead of themselves. They've seen the markets rally, it's up almost 30% this year, and there's a sense that I can do it by myself. And really what I want to get is the case for why people should be investing through collective investment schemes. I do know that FBN Capital manages a number of them.
Yeah, you're correct. The thing about at least private investors, for example, the amount of money they have cannot go around the whole market. When you use things like collective investment schemes, it actually, one, spreads your risks, right, and actually allows you to take positions in a number of stocks without even you doing it yourself. What we actually try to tell people is actually focus on your day job and let professionals manage collective investment schemes. What collective investment schemes are, they pull money from various sources of investors and put into various instruments. You can have it for fixed income instruments, you can have it for money market, you can have it for the equity. And right now, the equity market over a 52-week has done 30%. It's difficult for the private investor to say, which stock do I choose? Look, on a 52-week basis, First Bank has done about 76%. Guarantee Trust Bank has done about 80%. Access Bank has done about 70%. Which one do you actually sort of go for, right? And then we have a situation in the country now whereby returns from both the fixed income market as well as the equity market are booming. So your question is, which way do you go? How do you actually allocate your money? Let a professional fund manager do it. And there are a number of mutual funds, collective investment schemes out there that you can actually focus on.
I think when investors look at markets move like this, last week we saw some stocks going over 30%. I think the week that we saw market making introduced to the market, we saw some gain as much as 50%.
Correct.
And there's a sense that, listen, I can do this. I mean, it's all a question of trying to time the market, trying to get the best ideas from maybe a broker and getting into it. And, you know, I think there is that, that misconception that I can always get that 50% in a week return if I invest by myself. But then obviously nobody, if anyone could call that, then I think we'll all be retired by now.
The honest truth is hindsight is a wonderful thing. Look, even in the fixed income market, when treasury bills were doing 18, we still have people call and sort of say, I want to buy a treasury bill at 18, whereas treasury bills are down to 12 at the moment. It is easy to look at the paper, but people also need to be careful, right? Everybody can see the price of an asset. Do you really know the value underlying it at the end of the day? This is what professional fund managers do, right? It's what they do on a daily basis. You have the professional fund manager who actually makes the investment decision, and you have the analysts who are sitting down there crunching the numbers, looking at the business model of all these organizations, and then deciding how it actually fits into a portfolio. And that's what collective investment schemes do, right? So for the individual investor who is out there, you basically just spread your risk, you spread your money goes further, right? But you also need to be careful of the ones you go for.
From where you sit, have you seen any change in sentiment for collective investment schemes like mutual funds in Nigeria after the market came down? We've seen a massive bear run since 2008, and now it seems the market is recovering. Are you seeing any increased appetite from where you sit for collective investment schemes?
I think there's a bit of education, there's a bit of investor education that we need to do, right? Whether it's FBN Capital or the whole industry itself, because there is a misconception that collective investment schemes are companies. I mean, the Heritage Fund, for example, has done 13% year to date. And then we had a comment from somebody sort of saying, oh, because you haven't paid a dividend, you're a company, you haven't paid a dividend. The question is, you don't invest the money you need for your bread and butter tomorrow in these schemes. You actually have to invest them over a period of time. And we all know the how compound interest works. Let this thing generate you income and let it keep on recycling itself. There is a shift whereby, at least when we launched two funds, the money market fund and the fixed income fund recently, whereby people actually did subscribe, right? It was a height of when treasury bills were actually high. And so there is a shift, but there still needs a lot to be done to actually let people understand the benefits of collective investment schemes. And the honest truth is, when you get the right manager, you can't go wrong.
What's your rating of the risk of the markets right now? In fact, let me start from the equity space. We've seen the markets really come down over the last few years. Now it seems to be looking up. I think a lot of people believe that we've really turned the corner this time. Do you have, from where you sit as a fund manager, an increased appetite for risk right now?
The answer is possibly yes. And I take it from this perspective. There's a lot of foreign investment money coming in because interest rates are actually low down there, right? But within the space of the Nigerian market, which over a 52-week period has done 30% as well, and that is trading on a PE of about 17%. Now, within the components of that market, there are those that are doing have a PE of about 27, 28%. Those might be actually top heavy, right? But some of the banks actually have PEs of about 8 times earnings. So you have to be very, very selective, and we are very, very selective in the number of stocks we actually choose. We currently run a concentrated portfolio. It's not a matter of taking something and sort of shooting all over the place, right? You run a concentrated portfolio because sometimes you get the best return, right, that you can out of there. So there is a bit of appetite.
And what are your expectations for the market, especially the stock market right now? Do you think that this rally will continue, or do you think it's going to flatten a little bit?
There is expectation for Q3 results. There's a possibility that after
I think
Q3,
that could be a catalyst.
Look, we then start going into the quiet season, right, which is late November. Everybody's doing their budgets for next year. We go into December. Everybody's looking towards next year. So it won't necessarily be a full pullback, right? Things might actually stabilize, right? And then as we start expecting the 2012 results next year, then we actually pick up again. So 30% on a 52-week basis, 26% on a year-to-date basis. I actually think we may end up at about 30% totally for the end of the year, and then we start looking forward. Now, as long as there's still some uncertainty in the rest of the world, a lot of hot money may actually sort of push in our direction, and it doesn't help that JP Morgan has actually put our bonds into the JP Morgan emerging market.
It certainly helps the bond market. I mean,
it's
seen that rally dramatically.
Absolutely.
But let me bring you back to the discussion around why investors should go into collective investment schemes. What kind of appetite are you seeing from institutional investors? Because I think the culture in Nigeria is that they believe they have large portfolios, so they might as well construct their portfolios for themselves, even if they would give it to professional managers. But do you see many institutional investors going into mutual funds or unit trusts in Nigeria?
They haven't, and we actually suggest they do. Look, it actually aids one competition, right? In terms of, right, you know what you're doing, but you also have a benchmark, right, that the fund managers can actually sort of help you. The other side to it is maybe a lot of them have actually seen there are 45 collective investment schemes and about 98 billion of funds under management in Nigeria. Right. And a lot of them may have not performed, right, over the past, but there are changes, right? There are a number of us fund managers, right, who actually sort of have these things we restructured, like the Heritage Fund, we actually restructured it. There are some of our competitors who actually restructured their funds, and we actually sort of say, listen, keep an eye on them, right? As long as they have a benchmark. If you have an equity fund, what is the benchmark is actually trading at? It should actually be working to outperform its benchmark if it's a Nigerian stock exchange, right? Because you can't invest in all 200 plus stocks in the stock exchange, so basically you'll do that. In terms of fixed income, same thing. Look at the fund managers and how they are actually structured, right? You can't have a fund manager who sort of can do everything. What we've actually done, we have a fixed income team, we have an equity team, and these particular portfolio managers manage this. So in terms of institutional investors, the answer is yes, both from a local and an international perspective, because the internationals, why they can actually look for some of these stocks and invest themselves, there are those that are smaller and should actually look towards collective investment schemes.
What do you think the authorities should do in driving a change in culture? Of course, in most other markets we see, at least developed markets, we see many fund managers through collective investment schemes really driving the market, leading the way in terms of the volume of transactions on markets. What do you think the authorities in Nigeria should do? Do you think they should take, for instance, a tougher stance in driving flows into collective investment schemes?
I won't say much of a tougher stance. What can I actually say is that we need to actually educate and ensure people have a savings culture, right? If you look at the US, right, they have over about 8,000 mutual fund schemes, and about, I think the last time we checked was about 70% of households, right, in the US have collective investment schemes. Now, look at the pension fund industry. It's been regulated in Nigeria that has grown from almost 0 to 2.7 trillion at the last round. The same can actually happen in the Nigerian space. In the Nigerian space, the last banking deposits was about 11.6 trillion, right? Take mutual funds and benchmark it against that. We are less than 1%. Right, which means all savings.
We have a long way to go.
We have a long way to go, but it doesn't mean that it is not possible. It is possible because we just need to develop that savings culture. So maybe we need to create that mutual fund manual whereby there are tax breaks for the savings, right? Because right now you save in a bank, right, you're charged withholding tax, right? Maybe if you save in the mutual fund over a period, and it's not that you save today, take your money out tomorrow. It has to be over a period, and it has to be money, and there should be tax incentives, right? The industry itself, the fund managers actually sort of need to organize themselves much better. That we all need to work together rather than work at cross purposes to each other. And then it should also be driven, just like the pension fund is actually driven by the government, be driven by us as well. Be driven by the government as well.